Happy Monday morning, everyone. Here's the second bullish trade. In the first half an hour, market had been open. How in the world did I know that bias remains firmly bullish? I know extremely well it's a very counter trend day. This is second bullish trade that reached key Fibonacci targets. Adjust your trail extremely close. If you remember what has happened on the first trade, let's browse the importance of Fibonacci levels and let's browse the importance of playing by the rules. Take a look. This was the reversal zone on S&P hourly. But first time in months, we discussed with students in the course and we discussed in the trading room on September 7th. Sellers means serious business. This was S&P hourly. This is baby chart S&P. Let's see what it will do next. This morning we woke up and I said to our beautiful students this morning in Fibonacci review, cannot short S&P this morning, despite knowing that major trend is bearish, because hourly chart opening up at reversal zone. Second trade this morning, second trade is bullish. Why in the world it is? For one reason only. Sellers taking major pause. And every time price comes to reversal zone, knowledgeable trader monitoring for reversal and takes trade only if rules had been met. Rules had been met on the first trade, rules had been met on the second trade. Trail was placed in perfect place. Will price blast to reversal zone this time around? So let's take a look on S&P long-term charts and let's remember what to expect. This is S&P weekly. As I've been warning you for many months, this level been in front of you. As bullish rally on weekly 200 points later reached crucial Fibonacci target that's been displayed in front of you for many months. Have you been complaining about comatose market conditions? Complain no more. Selling pressure means serious business. But sellers this morning are quite exhausted. This is not the place or time to short S&P, as knowledgeable day trader always look to take long from as low as possible. But if you remember what happened on weekly, as 1800 number been in front of you for many years, this was reversal zone. In the months of February, in the months of March, where a knowledgeable trader was acquiring position. This is identical structure on weekly, where bullish rally started from, as where buyers are this morning on hourly. As price moves in exact same fashion on multiple instruments and multiple time frames. And this is what knowledgeable trader accomplishes. This is a knowledgeable student in the course. And this is what students share with me time and time again. Doesn't matter if student trades S&P, doesn't matter if student trades Apple monthly. Once you learn Fibonacci levels and once you learn Fibonacci rules, all you have to do is identify what's appropriate for you and your account size. Are you day trader? Are you Forex trader? Are you options trader? Every single person has different account size. Every single person has different ability to see and execute. Your risk management and your psychological comfort is everything. As this trade's struggling to break through reversal zone, shock or not, this level been displayed in front of you well before trade was entered. How you manage your trade will make a world of difference. Knowledgeable Fibonacci trader knows exactly where to enter and exactly where to exit. And when price comes to reversal zone, you do not enter trade. You already in significant profit and you moving your trail very closely. And that's the power of price and Fibonacci each and every time. No surprise here whatsoever. Second trade, reversal zone is reached. And that's the power of knowledge and price each and every time. And that's the accuracy of alpha wave trader method. Method I developed in 2008, method I taught from complete beginner to hedge fund trader. From Singapore to Middle East to Africa, from Florida to New York. Traders trade alpha wave trader method on any instrument and any time frame. And this is the method I will be sharing at Hedge Fund Convention at the end of September. Except at Hedge Fund Convention, I will be concentrating on long-term stocks, ETFs, and options. How you trade the method is your choice. Here we are, 15 minutes later, S&P is struggling to break through reversal zone, as you're witnessing on every trade. Different stop, different target. How you trade alpha wave trader method depends on you, as risk management trader psychology is the only difference. And here comes expected response on S&P. As you're witnessing, reversal zone is reached and price crushing and burning completely. Shock or not, this was expected. This is short-term S&P. This is S&P hourly. Price is doing exact same thing here as it's done on hourly, as it's done on monthly. Exact same Fibonacci levels. S&P been dancing in massive brutal correction for almost 3 years. But as long as this key Fibonacci level had been respected, it had been only correction. No surprise where selling pressure coming from, and this is where sellers heading to. This is exact same thing as gold had done on monthly. This is where collapse on gold had started in 2011 when a website was opened up. Looks familiar? This is reversal zone. Have you been exiting your gold position at this level? Have you been acquiring gold position from here? If you know Fibonacci levels and you play by the rules, you are not succumbing to massive advertising promoting to buy and buy and buy gold. You are closing your position, as gold had done exact same thing as S&P. This trade is out. This trade is in from reversal zone, but reached crucial Fibonacci resistance. No surprise here, this is the end of the minor trend, and gold is struggling for the last 4 months to break through this level. This is oil monthly. This is where collapse on oil had started in 2011. Anyone surprised? Should not be. Oil had done exact same thing. A short-term chart right in front of you on S&P. Reversed completely. And this was the end of the minor trend. Famous 76 level. Once this level was out, in 2015, oil went into free fall. Shock or not. This is where collapse has ended. This is where a bullish rally had started, as you're witnessing on multiple emails from graduates and clients of the course, where traders had been acquiring position at 30. But this is a big problem. This is a brick wall. This level 50. And if you were in the trading room last week on oil, remember that? Reversal zone? The most powerful bullish news since 1999 on oil, and oil reversed from reversal zone. Anyone surprised? If earnings and news did work, everyone would have been Bill Gates. If indicators worked, everyone would have been Bill Gates. Price comes to reversal zone and confirms to you once again everything preset in price far in advance. Oil monthly had done exact same thing as every single instrument you've ever seen, I've ever presented in front of you far in advance. Apple collapsed from reversal zone despite spectacular earnings. No surprise here. At 1:30, Apple earnings were flawless. Valeant collapsed from reversal zone for exact same reason. Price comes to reversal zone. You're exiting position. You are not entering one. That pure and that simple. And if you know the rules, you know what to do. And if you don't, you can't trade Fibonacci levels randomly. You can't speculate. I live and breathe Fibonacci. I'm witnessing that everything that surrounds us formed by Fibonacci levels and Fibonacci rules. Everything else simply background noise, as market is flawless Fibonacci puzzle. And if you know the rules, you know where to enter. And you know what to do with your position when price comes to key Fibonacci resistance. And it doesn't matter if it's 1-minute chart on S&P, or if it's gold monthly, or if it's Apple, or if it's Valeant, or if it's ETFs, stocks or options or Forex. That remains the key. Never hesitate to contact me for any questions, 925-257-4298 or info@fibinstitute.com.